Here you can see there's been a bear trap gap reversal. So we had the gap down there at the beginning of the month. Closed above the gap yesterday at I suppose 10.5 pence plus, and we're making progress today even in a bad market. Initially up to the 50-day line, obviously at 16 pence, but best case scenario target here could be towards the mid to upper 20s with the initial gap down that we had at the beginning of the year. That's around 27 pence, and possibly up to 34 pence if we can maintain the momentum. That could be seen over the next couple of months, but maybe that gap filled rather sooner. Only back below 10 pence really at this stage. Maybe you could make it 11, would really delay the upside or the recovery argument. Another COVID-related play, which is back in business, is Avacta, which I'm sure will please quite a few people. Here we broke the first trend line there from February around the 40 pence area. We've hit the initial resistance line target there from December around 56 pence. Could stretch up to the 50-day moving average. That is around 68, 69 pence, and that's probably where we'd go for over the next week or two. All the while, the recovery supported by a bullish divergence line in the RSI window, especially the last two bounces there, have been very useful indeed. On to a rather easier situation, Cloudbreak Discovery. Here it looks as though we're just about to break that line of resistance around the 9.25 pence level. End of day close above that would open up 13 pence. Best case scenario target maybe by the end of next month as high as 20, especially given the way that we've had these really strong candles. Also have an RSI uptrend line off which we bounced last week, and that should also provide decent momentum, as does the way that the shares managed to bounce well above their 50-day moving average at 4 pence on the latest dip. Stock which seemed to be down and out just a few days ago was Gfinity, but things looking a bit better now with the bounce off this RSI support line and a very oversold RSI sub 20 pence. The other point to note, I suppose, is the way that we've had a key reversal to the upside so far today. So yesterday's high around 1.3 pence, and above that on an end of day close basis, we could at least head back to the bottom of the gap at 1.6 pence. End of day close above that would then open up 2 pence plus, but obviously it's early days at the moment. Moving on to a stock which is looking encouraging and has been looking encouraging with a very decent setup. That is a gap higher off, unfilled gap higher off the support area. So that was around 5p for Greenrock. Then easily broke the 50-day moving average at 6 pence. Current situation is that while we're above the neckline resistance around the 6.25 pence area to 6.5, looking for that resistance line there from back in October as high as 9.5 pence. But ideally we get an end of day close today above 7 and we head up to 9.5 well before the end of the month. The way the 50-day moving average is also rising, that is also a positive. Rising 50-day line near the lows tends to be a decent reversal signal over and above that unfilled gap to the upside that we had off the low, which is also a very strong signal and has so far proved to work. On to Genedrive, which continues today's theme of the COVID rebound. Here we've broken that line of resistance from January. Around 15 pence above that, we should at least head up to the 50-day line at 20, and maybe if we're really lucky towards the 30 pence area, which was resistance on the way down back in January. But at least 20 pence we could see over the near term, maybe the next few days. We've got an uptrend line in the RSI window as well, which is also, or should also, provide some momentum for the stock. But if you're cautious, maybe wait for an end of day or a weekly close above 20 before assuming that the worst is over at Genedrive. On to Encandazy, which is interesting, maybe not to many people, but it's interesting to me on the basis that we've had this sideways shuffle at and above the 50-day moving average. That's around the 0.7 pence area. Clearance of the 1 penny area should allow the shares a retest of last month's resistance at 2 pence, or at least the 200-day line around 1.6 pence, and obviously the stop loss there back below the 50-day moving average. RSI bouncing off the neutral 50 level as well is also a positive for the technicals. A more obvious recovery here comes from Toulouse, where we broke that line of resistance there from December. That was at 1.8 pence, and above that, looking for the 200-day moving average area at 2.5 pence. Maybe by the end of next month. We've also got bullish divergence there over the last, the February and the March lows, so that is an added boost for the stock over and above the gap high we've had today. End of day close above 2 pence today should see the shares keep on moving towards late December resistance or early January resistance at the 2.5 pence zone. Quite spectacular chart here at URU. Here we've got, here we had a bear trap gap reversal, a bear trap reversal rather, which was from below £1.50. We gapped higher then soon after that, beginning of this month, and just bounced off the gap, the V-shaped bull flag, which is one of our favorite patterns as well. And just to top it all off, we've got a rising 50-day moving average near the lows, which, as I said, is a useful signal, and a bullish divergence line there versus the lower March price low with a higher RSI low there. So that is all shaping up nicely. View at this stage is that at least while we're above yesterday's high around £3.20, we could make further progress towards not only £4, but maybe a bit more than that over the near term. £5 maybe by the end of next month as a best case scenario target. On to UOG, United Oil and Gas, which today is beaten the market's expectations, I would say. Here we've had a bit of a crawl above the 50-day moving average, and we gapped higher too. Also got this bullish divergence line in the RSI window, which looks like it's finally starting to kick in for the shares. Today's better performance may be down to that. And above 2.5, or the longer the shares can stay above 2.5, the greater the chance of a move towards that September resistance line at 3.5, perhaps by the end of next month. Good to see Valerix making a recovery here. Just breaking out of this falling wedge at the moment. Needs to get to sort of 24 pence plus on an end of day close basis to open up the prospect of 35 pence, which is that January resistance line projection. We're boosted by the rebound off that falling RSI support line. But the real signal here really would be the break of that December resistance line at 24 pence on an end of day close basis. That's it from me today. More updates